The crypto market just went through one of the most violent moves we've seen in over a year. And yet, this might be the single most important setup before the next explosive run. Less than 48 hours after that massive crash, we're seeing numbers that look absolutely brutal across the board. Bitcoin down over 7%, Ethereum dropping double digits, and some altcoins, including major names like XRP and XLM, falling more than 12% on the day. On the surface, it looks catastrophic. Portfolios are bleeding red, emotions are running high, and social media is in panic mode. But here's the thing most people will miss. These are the moments when the market silently sets up its biggest winners. This is not financial advice. When you see 20, 30, even 40% declines across the top coins in less than a week, it's not just fear, it's a transfer of wealth. The impatient are giving up their positions, while smart money quietly positions itself. And if you understand how to read this setup correctly, this kind of volatility could mark the end of the correction phase, not the beginning of a bear market. We'll break that down in detail. But before we go any further, if you're serious about taking advantage of what's coming next for XRP, make sure you check out the XRP Millionaire Blueprint. It's a full breakdown that includes a professional document, visuals, and video training showing the framework I use to find setups, just like this one, before they explode. Everything's organized and easy to follow, and it's in the pinned comment below the video. Now, let's get into what's really happening right now. Looking at the daily market view, this sell-off hit almost every major coin, and it hit hard. Bitcoin dropped to around $14,600. Ethereum slid under $3,250. And XRP touched lows near 152 after hitting highs around 259 earlier that day. That's a single-day drop of over 40% from wick to wick. These are not small moves, but in crypto, they're not unprecedented either. In fact, this type of shakeout has been the launchpad for nearly every historic rally we've ever seen. If we go back to 2020 during the COVID crash, the total crypto market lost about 65% of its value in a matter of weeks. Fast forward to now, the total market has dropped around 24% from the highs, roughly $1 trillion wiped out in value. That sounds terrifying until you zoom out. In the grand scheme of this market's history, this kind of correction is actually healthy. It's a reset, flushing out leverage, clearing weak hands, and recharging the momentum that fuels the next move. The total altcoin market, often referred to as Total 3, tells the same story. On a single weekly candle, altcoins fell over 46%, one of the steepest drops we've seen in recent history. But when you overlay this chart with previous cycles, something stands out. Each time we've had a move this sharp, it's been followed by months of steady accumulation before massive expansion. The current candle perfectly retraced into demand zones that date all the way back to early 2024. Technically speaking, it's a textbook retest of prior structure, and that's exactly what a market does before it launches again. And that brings us to the RSI. Relative Strength Index measures momentum. And right now across the daily and weekly charts, RSI levels for Bitcoin, Ethereum, and XRP are near the same points we saw at the April and June bottoms. Every time RSI has been this low in recent years, it marked a significant reversal zone. We might still see some sideways chop through the weekend, maybe even a small dip before the weekly close, but momentum is showing signs of exhaustion on the downside. When that happens, it's only a matter of time before buyers step back in. Now let's talk about something most people overlook: the nature of this sell-off. This wasn't your typical slow bleed or retail panic. This was a liquidation event. Over 16 billion in leverage positions were wiped out within hours. That triggered a cascading effect, forcing billions in forced sell orders across the board. This is exactly why experienced investors always warn against heavy leverage in crypto, because one unexpected cascade can erase an entire portfolio overnight. What we just saw wasn't organic selling, it was a liquidation reset. And when that happens, history tells us that the worst usually passes very quickly. In XRP's case, that wick down to 152 was pure liquidity grab. The market swept stop losses, filled deep orders, and bounced right back above the key support level near 170. That kind of move isn't weakness. It's market manipulation at its finest, and it often signals a local bottom forming. If you go back and study XRP's historical price structure, every major run began with a similar violent move. First, a massive shakeout to clear the board, followed by a period of quiet accumulation, and then a vertical move that no one expects. Even looking across the broader macro landscape, the setup is lining up eerily well. Tom Lee from Fundstrat recently told CNBC that the spike in the VIX, the volatility index, was one of the largest in years, ranking in the top 1% of all historical spikes. In plain terms, that means panic is peaking. When fear reaches extreme levels, forward returns tend to be strongest. Historically, markets are often higher 1 week or 1 month after these types of volatility spikes. That aligns perfectly with what the crypto charts are showing right now. Fear maxed out, price oversold, and liquidity flushed out. It's the same psychological cycle that plays out every time. Retail investors panic and exit at the bottom. Institutions accumulate while fear dominates headlines. And a few weeks later, the same people who sold start chasing green candles again. It's the oldest story in the market, and yet it repeats every cycle because emotion always beats logic in the short term. That's why patience and perspective are so powerful here. The current drop isn't the end of the cycle, it's a setup. The question isn't, is this the start of a bear market? The real question is whether you recognize this as the opportunity it is before the next wave of capital floods back in. Because remember, the fundamentals haven't changed. Institutional adoption continues, regulatory clarity is improving, and projects like Ripple are still pushing forward at full speed with partnerships that traditional finance can't ignore. On top of that, Bitcoin dominance has been climbing during this drop, which is typical during market resets. Once that stabilizes, liquidity tends to rotate back into altcoins, and XRP is one of the assets that historically benefits the most during that phase. The pattern is there, the sentiment is there, and the technicals are lining up again. And that's why this moment right here might be one of the most important windows before the next run. Because once the rebound starts, it's going to happen faster than most people expect. That's what always catches retail off guard. The turnaround never gives you a second chance to buy in at the same levels. The same investors panicking now will be the ones saying, I should have bought the dip once XRP is back above $3. And Bitcoin is recovering toward 120K. We're not there yet, but the groundwork is being laid right now. When we zoom out and step back from noise, the bigger picture becomes crystal clear. This entire event fits into a much larger macro cycle that's been building quietly for months. Every major bull run in crypto has always had a violent correction phase right before it takes off again. It's the market's natural way of resetting sentiment and liquidity before entering the next major expansion. Let's look at Bitcoin first because everything in crypto still orbits around it. Despite the fear, Bitcoin's long-term structure is still incredibly strong. Even with the latest drop down near $104,600, the macro higher lows remain intact. The previous bottom in April formed around $98,000. And we haven't even come close to revisiting that level yet. That tells us that while short-term volatility is brutal, structurally, Bitcoin's uptrend hasn't been broken. The weekly RSI is approaching the exact same region we saw at prior market bottoms. When you combine that with how stretched funding rates became leading into this crash, it was a textbook setup for a liquidation washout before the next rally. Now here's what makes this current moment fascinating. During every major crypto bull market, Bitcoin leads the recovery, but it's the rotation into altcoins that produces the biggest gains. Historically, that rotation happens once Bitcoin stabilizes and consolidates after a shakeout like this one. In 2017, it took about 6 weeks after the March crash for alts to start exploding. In 2021, it took only 3. If we're following a similar pattern, the window between now and late November could be the final accumulation phase before the altcoin market reignites. This is exactly where projects like XRP tend to outperform. Historically, XRP's strongest runs have followed after Bitcoin volatility cools off and liquidity flows into assets that have strong utility narratives. And right now, few narratives in this space are stronger than what's forming around cross-border settlement and tokenization. both areas where Ripple is positioned as a frontrunner. Let's talk about that for a second. The last few months have been massive for Ripple on the institutional side. The ongoing expansion into real world asset tokenization, partnerships across the Middle East, and pilot projects with central banks. All of that continues regardless of short term price action. Price is the reaction, not the cause. What we're witnessing right now in XRP's price is not a reflection of its true value. It's a temporary liquidity event caused by a leverage unwind. The fundamentals, however, have never looked stronger. Now, fast forward to today. XRP structure on the macro chart still looks incredibly constructive. That wick down to 1.52 was sharp, but it didn't break any critical long term support zones. The multi-year trend line that started forming back in late 2022 is still holding. We've seen this exact setup multiple times, a deep liquidity wick followed by months of quiet consolidation, and then an explosive move once volume returns. If we break this down technically, you'll notice that XRP's RSI on the weekly time frame has returned to near oversold levels, something we've only seen 3 times in the past 4 years. Each time it preceded a major reversal within 2 to 3 months. On top of that, the weekly MACD is flattening, indicating momentum could soon shift back in favor of buyers. These are not short-term signals. These are the kinds of indicators that shape the next leg of the cycle. But what makes this setup even more powerful is the alignment between technical structure and macro narrative. The global financial system is currently going through one of the largest transitions in history, from traditional correspondent banking to instant digital settlement. Swift's system is old, slow, and expensive. Ripple's on-demand liquidity model using XRP solves that. It reduces settlement time from days to seconds and cuts costs by up to 90%. And now that central banks, financial institutions, and even governments are openly exploring blockchain-based settlement systems, the timing couldn't be better. So when people panic about XRP dropping 12% in a day, they're missing the forest for the trees. This isn't about one day or one week. This is about the architecture of the next generation of money, and XRP is one of the few assets directly connected to that shift. Meanwhile, the rest of the market is going through the exact same reset phase we've seen countless times. Ethereum's drop under $3,250 might look ugly, but it's retesting levels that have historically acted as launchpads. The total crypto market, excluding Bitcoin, the so-called Total 2 chart, has come back into its previous breakout range. Every cycle, that range acts as a magnet for liquidity before the next expansion. One of the key things I've been paying attention to is how quickly sentiment flipped. Just 2 weeks ago, the market was euphoric. People were talking about new all-time highs, meme coins were flying, and leverage was at its peak. And now, those same people are convinced the bull market is over. That kind of extreme sentiment shift is exactly what precedes reversals. In markets, maximum fear equals maximum opportunity. Let's put this into perspective using data. Since 2015, every single crypto cycle has had at least one major correction of 30% or more before continuing higher. In fact, in 2017, there were 5 separate corrections over 35%. Yet Bitcoin still finished that year up more than 1,400%. These pullbacks are brutal, but they're part of the game. The problem is that most people give up during them, and that's why they miss the parabolic phase that comes after. Another important signal is what's happening in traditional markets. The S&P 500 just had its biggest volatility spike in over 6 months, with the VIX shooting up more than 29% in a single day. Historically, those events coincide with local bottoms, not tops. Tom Lee pointed out that these spikes are often good flushes, short-term moments where the market purges leverage and fear before resuming its trend. If that's true, and equities stabilize over the next week or two, crypto will likely follow right behind. Remember, crypto's volatility is higher, but its correlation to macro sentiment remains strong. When risk on assets recover, crypto tends to lead the way higher. That's why patience right now is crucial. Everyone wants instant confirmation, but markets don't give it to you. The recovery phase always feels uncertain. Back in April, when we had the last significant correction, people were saying the same thing. It's over. The cycle's done. But within 45 days, the total market cap added over $800 billion. That's how fast sentiment flips in this industry. Let's also consider the broader adoption trends. Ripple's ODL usage continues to expand. Global payment volume on blockchain rails keeps growing. And institutional custodians are integrating XRP alongside Bitcoin and Ethereum. These developments don't pause because of temporary volatility. If anything, they accelerate because market resets give big players a chance to accumulate at better valuations. In the long term, we're watching a convergence of technology, regulation, and liquidity as the next wave of tokenization gains traction, with trillions of dollars in real-world assets expected to migrate to blockchain over the coming years. The need for fast, efficient settlement tokens will only increase. XRP sits directly in that lane. The same infrastructure being built for central bank digital currencies can easily integrate XRP's rails. That's why this current correction, as painful as it looks, might be setting the stage for something much bigger than just another bull market rally. It's positioning the digital assets that actually have utility to dominate the next phase of this market. Once liquidity returns, and it always does, the market tends to move violently in the opposite direction. The recovery will likely be sharp, driven first by Bitcoin reclaiming lost ground, then by capital rotation into large cap alts like XRP, and eventually into smaller projects as risk appetite returns. That's why it's so important to stay focused on the big picture. Ignore the noise, ignore the daily headlines about the end of crypto. We've heard them every cycle, and every single time the same thing happens. The market shakes out weak hands, consolidates, and then moves higher than before. If you think long term, this period right here, the fear, the red candles, the panic, is exactly where opportunity hides. Because in hindsight, these are the weeks everyone looks back on and says, that's when the bottom was forming. Now, looking even further ahead, it's critical to shift from short-term volatility to the long-term trajectory of the crypto market and XRP specifically. While daily swings and liquidation events dominate headlines, history shows that true wealth in crypto is built by focusing on structural trends and long-term adoption. When you zoom out, the repeated pattern is clear. Every major correction serves as a reset, wiping out weak hands and creating prime accumulation opportunities for the next phase of growth. Bitcoin, as the backbone of the crypto ecosystem, remains the anchor for this growth. Even after the recent drop to $14,600, Bitcoin has held its macro support structures. The trend lines formed since late 2022 continue to define a rising channel, indicating that while we've experienced intense short-term pressure, the long-term uptrend is still intact. Historically, when Bitcoin holds these multi-year trend lines, altcoins typically follow in waves of explosive growth once the macro recovery begins. That's exactly what we saw in previous cycles. After major shakeouts, liquidity rotates from Bitcoin into high-quality altcoins like XRP, fueling some of the most rapid gains in the market. XRP in particular is positioned uniquely for the next phase of expansion. Beyond price charts, it's about fundamentals and real-world adoption. Ripple's ongoing institutional partnerships, cross-border settlement integrations, and pilot programs with central banks are quietly laying the groundwork for significant upside over the next 12 to 36 months. Unlike speculative tokens, XRP's utility is tangible and its adoption trajectory is measurable. That creates a structural advantage in a market where most assets are still highly speculative. When we analyze XRP's historical cycles, a clear pattern emerges. Major liquidity wicks, like the recent drop to 1.50 U, often precede extended periods of consolidation that accumulate buyers at lower levels. After those consolidation phases, XRP has historically launched into multi-month rallies that far exceed the prior highs. These aren't random price movements. They're predictable outcomes of the market structure combined with XRP's increasing real-world adoption. Looking at the macro crypto market, the total market cap remains in a structurally bullish range. Even after the $1 trillion wipeout, support zones dating back to early 2024 remain intact. This is critical because these zones represent institutional and long-term accumulation points. When the market consolidates here, it provides the stability necessary for the next parabolic move. In other words, the groundwork is already set. All that's needed is time for sentiment to stabilize and for capital to rotate back into risk assets. The psychological aspect of these corrections cannot be overstated. Right now, fear dominates headlines and social media sentiment. Retail traders panic, leverage gets liquidated, and the emotional cycle reaches extremes. But historically, maximum fear has coincided with maximum opportunity. Every bull market in crypto has been punctuated by a moment like this: intense volatility, dramatic price drops, and widespread doubt. Those who understand the long-term narrative recognize these moments as the perfect accumulation window. And while short-term price action can be nerve-wracking, the long-term signals remain overwhelmingly positive. Ripple's network continues to expand its utility. Adoption by financial institutions grows steadily, and regulatory clarity is improving worldwide. XRP's role as a bridge asset in global finance becomes increasingly relevant as traditional systems struggle with inefficiency. This combination of technical, structural, and fundamental factors creates a rare alignment that can drive substantial long-term gains. Now consider the broader macro environment. Global financial systems are undergoing significant change. Central banks are exploring digital currencies. Cross-border settlements are under scrutiny, and efficiency-driven solutions are in high demand. Ripple's on-demand liquidity model using XRP addresses these exact challenges by reducing transaction times from days to seconds and lowering costs dramatically. The adoption curve for these solutions is accelerating, and the longer-term implications for XRP are enormous. We can also look at historical parallels to understand what might come next. During the 2017-2018 cycle, XRP experienced similar consolidation phases following sharp declines. After a period of sideways accumulation, the token launched into a multi-month rally that produced massive returns. Similar patterns were observed in 2020-2021. While past performance does not guarantee future results, structural similarities in adoption, market cycles, and technical setups provide a high probability framework for anticipating future moves. This isn't about chasing short-term pumps or trying to predict daily highs and lows. Long-term success in crypto comes from identifying assets with real-world utility, understanding their adoption trajectory, and accumulating strategically during periods of volatility. XRP fits all of these criteria. The recent crash has shaken out leverage, cleaned up the market structure, and created one of the most attractive accumulation windows in recent years. Those who take a disciplined, long-term approach now could be positioned for significant upside in the coming cycles. Liquidity rotation is a key dynamic to monitor in crypto markets. Historically, once Bitcoin stabilizes following a correction, capital tends to flow into high-quality altcoins with strong fundamentals, adoption, and technical setups. XRP consistently emerges as one of the first major beneficiaries of this rotation. Its established market structure, growing institutional interest, and expanding real-world utility position it favorably for renewed momentum. As liquidity shifts from Bitcoin into alternative assets, XRP's combination of use case relevance and investor confidence makes it a likely leader in the next phase of the bull market, signaling potential upside ahead. Long-term investors should also consider the regulatory landscape. Increasing clarity and mainstream adoption reduce barriers for institutional capital. Ripple has been proactive in working with regulators and building compliance solutions for financial institutions. That positions XRP ahead of many competitors who still face uncertainty regarding legality and use cases. Regulatory alignment and adoption are powerful long-term catalysts that amplify the potential for growth once the broader market resumes its uptrend. So, while the recent crash may have felt catastrophic in the moment, zooming out reveals a different story. The correction has cleared leverage, forced weak hands out, and set the stage for a disciplined accumulation phase. Technical indicators, adoption metrics, and macro trends all point toward a Significant opportunity in the long-term horizon. This is the kind of environment where careful positioning can generate outsized returns over months and even years. For anyone serious about positioning themselves for the next major crypto cycle, understanding the long-term narrative is critical. That means recognizing the structural setup of assets like XRP, the adoption story, and the market dynamics that drive these cycles. With the groundwork now in place, the next phase of growth could unfold faster than most expect, but only for those prepared to act strategically and patiently. If you want a detailed framework for capitalizing on opportunities like this, make sure to check out the XRP Millionaire Blueprint. It contains a complete guide including a professional document, infographics, and step-by-step video that walks you through how to position for maximum upside. Everything is structured for clarity and actionability. It's in the pinned comment below. The